Hi everyone, welcome back to our channel. Today, we are going to dive into a fundamental concept in finance, retained earnings. If you've ever wondered how to calculate or understand retained earnings, you are in the right place. Before we get started, if you're new here, don't forget to subscribe and hit the notification bell to stay updated with our latest videos. Retained earnings are a critical part of a company's financial health. Essentially, they represent the cumulative net earnings that a company retains after paying dividends to shareholders. Now, let's break down how to calculate retained earnings. It's quite straightforward. Here is what each component means. Beginning retained earnings are the balance of retained earnings from the previous accounting period. Net income includes all revenues and gains minus expenses and losses for the current period. And dividends are the amount of profits distributed to shareholders. Let's walk through a quick example for better understanding. Suppose at the beginning of the year, a company had retained earnings of $50,000 during the year. They generated a net income of $30,000. They also paid out $10,000 in dividends to shareholders. To calculate the retained earnings at the end of the year, retained earnings equals $50,000 plus $30,000 net income minus $10,000 dividends paid equals to $70,000. So, the retained earnings at the end of the year would be $70,000. Understanding retained earnings is crucial because it reflects how much of a company's profits are reinvested back into the business rather than distributed to shareholders. It's also an indicator of financial stability and growth potential. For more interesting facts on retained earnings, visit www.theledgerlabs.com. If you found this video helpful, give it a thumbs up and share it with your friends. Don't hesitate to leave any questions or comments below. Thanks for watching, and we will see you in the next video.